Welcome back to the Star Carter Personal Finance channel. On this channel, I talk about everything personal finance and everything that's going to help us be up on our A game out here on these financial streets. So I appreciate you all that's joining all my new live sessions. So this is something that I'm trying new on the channel, doing a lot more live content to really interact with more of my subscribers and some potential subscribers. So I really do appreciate all the love. So, guys, you know me, I'm always reading in these newspapers and stuff and seeing what's going on out here, as I say, the financial streets. And I ran up on a very interesting article again on the Wall Street Journal. And they were talking about credit builder cards and how these cards work and what do they do to help you build your credit. Is it a good thing or is it a bad thing? That's what we're going to talk about today in this live. So if you are on the live, please, guys, drop me a heart in the chat. Give me a red heart or a purple heart. Let me know that you can hear me and that we can go ahead and get this live started. So I'm going to go ahead and pull up our very first article. And don't forget to give this video a thumbs up. That helps push the video out to anybody else that might want to see this content. And I really do appreciate all your love. So let's go ahead and I'm going to pull up the first article. And this is from the Wall Street Journal, as I was saying. And we're going to talk about these credit builder cards that's very popular these days. So let's get into it. So it says, credit scores without debt. Fintech cards baffle credit industry. Credit card builder cards lets user deposit money to pay bills. The fintechs say this counts as borrowing. So this article actually came out today on August the 28th at 5:30 this morning. So this is very new news. So let's get into it. Fintechs with names like Chime Financial and Credit Sesame are advertising an unusual perk on some of their products. Consumers can boost their credit scores without ever borrowing or paying back any money. Millions of Americans have opened these so called credit builder cards since the first major ones came onto the market around the start of the pandemic. Customers deposit money into these accounts to pay bills or make purchases, much like with a debit card. Here's the twist. Fintechs report some of these transactions to the credit reporting companies as credit activity or borrowing, even though no credit is ever extended to the customer. Fintechs taunt credit builder cards as a way to smooth out flaws in a credit scoring system that to some makes little sense. Under normal circumstances, the only path to build credit score is to borrow money. In other words, people need to take out loans to establish credit scores, but they need credit scores to be approved for loans. Credit builder cards, on the other hand, often don't require credit checks at all, much less a particular score. The cards are also designed to mainly report positive data. For example, the cards offered by Chime and Credit Sesame make it difficult or impossible for customers to become delinquent. Now, let's talk about how it works. For decades, nearly every decision in U.S. lending has resolved around the little three-digit numbers known as credit scores. The credit reporting companies, Experian, Equifax, and TransUnion, gather reams of data on individual Americans and turn that into credit reports. Those data points are then fed into algorithmic models from Fair Isaac, which is FICO, or Vantage Score, to produce credit scores, which are designed to predict the likelihood that a borrower will become delinquent on a loan. Lenders pay for credit data and scores to help decide who can get a loan and how much interest they will have to pay. But the scores are even more important than that. Employers might consider them when deciding whom to hire. Landlords might look at them when deciding who gets to rent an apartment. And one other thing that they left out is insurance also will look at your credit when they are looking to give you a rate for a premium. The very system is under scrutiny. On one side, regulators say it locks out people who have limited credit histories, maybe because they are new to the new maybe because they are new to the US or have largely used cash and debit. Consumer advocates say the scores are unfairly opaque and making it hard for people to even guess why their score may go up or down. Banks for the Banks for their part are becoming more skeptical of the usefulness of traditional credit scores. For example, the pandemic inflated credit scores for many borrowers. In recent years, banks have started to incorporate more of their own internal data and models into credit decisions. And so we know that is a thing if you are a member of Navy Federal that they have their own internal scoring model, and a lot of banks and credit unions do, as you just heard. A win-win or an unhealthy approach. Okay, so that's what we're talking about. Is this approach to credit building, is this a good thing or is this a bad thing? So they saying a win-win or an unhealthy approach. The world of traditional credit hasn't exactly embraced credit builder cards, which banks and other industry players say don't accurately reflect their ability and willingness to repay. At some larger banks, underwriters don't give the cards as much weight on borrower applications, people familiar with the matter said. Even the three credit reporting companies can't agree on how to deal with the cards. Jeff Softly, Group President of Consumer Services at Experian, called the cards a win-win scenario. Experian has its own credit builder card. So that's very, very funny for them to say even the three credit reporting company can't agree on how to deal with the cards, but yet Experian call it a win-win scenario and even have their own. So that's interesting. Consumers are getting a more comprehensive and enhanced credit profile, Softly said, and lenders are getting access to a broader swath of consumers who are eligible for their products and offers. Equifax said it incorporates credit builder cards into its reports as long as they meet certain industry guidelines. Some credit builder cards are also listed on TransUnion credit reports and fed into FICO and Vantage Score algorithm, said Paul was at Siegfried, TransUnion's head of card and banking. But only a handful of these cards meet requirements to be included in TransUnion's own credit scores, he said. There are a number of entities that are looking to report what would consider non-credit data to TransUnion as credit data, Sigfry said. We don't believe that the approach is a healthy approach for the lending ecosystem as a whole. So what FICO and Vantage say? So these are your two credit scoring models, as we know, with FICO being the most popular. Vantage is owned by the three credit bureaus. So Vantage was formed by TransUnion, Equifax, and Experian. As I had said in a previous video where we was talking about the FICO 10T, and I think the thumbnail on that video was talking about your score dropping 20 points with that new model. One thing about lenders in this article said it, early up, it said that lenders buy your credit profile and they buy your FICO score. So the credit bureaus do not own FICO. FICO is its own business. So when they formed the Vantage score, it was to cut out the middleman, which is FICO, so they would not have to pay them for credit scores. But I did like a whole breakdown on how all that work and everything in that video. So I'm gonna link it in this video if y'all want to go back and look at that one. FICO said it is still studying what credit builder products mean for its scores, including how they relate to the likelihood that consumers will make payments on credit obligations in the future, said Jim Woodman, Executive Vice President for Scores. So FICO said it is still studying what credit builder products mean for its scores, including how they relate to the likelihood that consumers will make payments on credit obligations in the future. Okay, so that's something to think about because now we know FICO 10 came out and 10T came out in 2020, in December of 2020, with the T standing for trended data. So I can predict in the future that the next model may be looking into putting credit builder cards inside of that model. So that's something that I'm going to continue to watch to see if FICO will be trying to incorporate that into their scoring system as far as the algorithm is concerned. Vantage Score, which likes to build itself as a more forward thinking alternative to FICO, said it has started to work with the industry players to help them understand how to improve the most beneficial way possible the consumer's credits. The consumer's credit score, according to CEO Silvio Tavares. So, of course, the I like the water. VantageScore, which likes to build itself as a more forward-thinking alternative to FICO, of course, because you guys own it. But the credit bureaus own it. But even he is still wrapping his head around how exactly to do that. The challenge is, of course, not all credit builder products are the same, and so there are some variability in the impact. The business models and terms vary from fintech to fintech. The cards generally don't charge interest, but they can bring in revenue for the fintechs through interchange and other fees, as well as new customers and data. James Adder, a retail associate outside of Seattle, opened a Chime credit builder card around a year and a half ago after a slim credit file and several unpaid bills dinged his score. His score jumped dozens of points to just under 60 over, I'm sorry, just under 600 over the first 3 months, but then started to level off. Adair opened another credit builder card with a different fintech and eventually traditional credit cards with Capital One and Discover. His score has since increased another 75 points, he said, but he acknowledged there's no way for him to tell how much of that was driven by the fintech cards and how much by the traditional credit cards. There was a He said there was a little sprint, said Adair, 47 years old, but credit scoring is a marathon at the end. So let me look into the comments and see who we got before I get into even more of the conversation. So we got Miss Thomasina. Thank you so much for being here with me. Thank you again, Miss Heather, from joining in for Raleigh, North Carolina. I got Tim. Thank you for joining me this afternoon. And I got Miss Kathy. Thank you for joining me again, is where I do appreciate all y'all's love and continuing to jump in on the lives when y'all see I'm on the live. I really do appreciate it. So what do y'all guys take on this? Have any of you that's on this live, have any of you ever used any credit builder to either start your credit or rebuilding your credit after your credit has taken a hit? I've never used a credit builder card or account before or anything like that. It's very new, and as they were saying in this article, that a lot of these kind of popped up around the pandemic. And then we also saw in the article where it said that there was a lot of inflated scores during the pandemic as well. And so a lot of bankers, a lot of lenders was not really relying on the credit score as heavy because they felt like a lot of the credit scores was inflated and was not accurately showing the ability for people to really pay back money. Okay. So that's why a lot of banks have, turned to their own internal scoring and their own internal systems to approve a person for money, credit card or whatever, aside of just looking at their credit score and looking at their credit profile, but looking at the whole overall picture of their financial situation. So let's look at a couple of those credit builder cards that they talked about in the article from the Index Journal. And I want to start with Experian first, because it was funny to me that it was funny to me that Experian, in the article, it would say that Experian, one of the big three, said that they don't know what to do with them. But yet Experian offers something on the credit builder side. And I want to say that Experian was, and y'all correct me if I'm wrong, Experian was one of the first people that was talking about the Experian Boost, which also reports things that are non-traditional lending, like your rent and your cell phone bill and stuff like that. Anything that you pay on a monthly basis, they wanted you to link your checking account to the Experian Boost so they can see what are some of those reoccurring charges and let those report on your actual credit report. I never did it before. I know it was a thing, but I want to say Experian was one of the first people that introduced that Experian Boost and was showing people that there's an alternative to just having, credit being reported to your credit report that is not on the lending side. So let's look at this Experian card. Now, one thing, and I got some of my do's that I do like about the credit builder cards, and I have some of my dislikes. So I have some of my likes and I have some of my dislikes is a better way for me to describe it. So we're gonna start with my likes first. I like that a lot of these you do not have to get in debt in order to build your credit. I do like that because a lot of times when we first get our first credit card, and if you don't have any financial education or literacy on how credit cards work, a lot of people get in financial ruin with credit cards. No matter what size or the limit, you can find yourself in a debt cycle with credit cards. So it's very important that you don't start with a credit card until you actually fully understand how a credit card works. So I do like that these credit builder cards are an option without you getting yourself in debt. I also like that it is no hard inquiry for a lot of these credit builder cards. Because in essence you are creating a account with them that is usually a checking account so that they can issue you a debit card that you can use as a credit card per se. I do like that a lot of them does not have a quote unquote security deposit as you would have to do if you did a secured credit card with a bank or a credit union, or if you did a secured card with one of the major banks that offer them. So you don't have to tie up your own money or set your own limit in that type of way in order for you to start to gain a credit limit, or a trade line is a better word to say. And my last one was another thing that you're able to do, you're able to build it with your everyday spending because you are using it as a checking account. And so all your swipes will be counted as, like you were doing a charge on a credit card. So that will, help you as well as far as, actually using the card and being able to have some activity for them to actually to report. And you don't have to spend any money that you wasn't going to spend. And that's what happened. That's a bad thing that happens with a lot of people with credit cards. They end up overspending because they're not attached to the money, because it's not their money. When you get a credit card and you're not putting up a security deposit or anything like that, you get detached from the money because it's not yours. And that's how a lot of people get in credit card debt, especially with these higher limit credit cards that we talked about in one of my recent lives that I did, where I talked about Navy Fed's interest rate is going up, and a lot of people were having a lot of concern about that. And I said, what we really need to be concerned about is paying down our debts and not carrying a balance on our credit cards and just throwing away money in interest. So I know a lot of people it can cause you to overspend, live above your means, especially when you have higher limits. So I do like that you can build credit with just everyday spending, things that you're going to do anyway. So those are some of my likes. Now, to my dislikes. My dislikes is I don't like the credit builder card because it does not help you gain a relationship with an actual bank or credit union. You're not building a relationship. And that is very important, that you're building a relationship with a bank or a credit union. Now, when we're talking about black and brown people, Hispanics, that historically we have always been what they consider underbanked or underserved when it comes to banking. A lot of times we end up choosing alternative banking methods that are usually high cost, predatory, and just not overall good for your financial health, especially over the long term. And so I think it's so important that we have a relationship with an actual bank or a credit union. My preference is you have it with a local bank or a local credit union, preferably a credit union, because a credit union always have the lowest interest rates, always are for the member. They're not for profit institutions. So therefore, they're not trying to raise fees, raise rates, try to, like I said, raising fees, trying to fee you to death because they have shareholders and all that type of stuff. When you become a member of the credit union, you are the shareholder and not some big people that you ain't never seen before. Okay. So that's why I always preach that people should start a banking relationship. So when you have these credit builder cards and you have these cards for however long that you're using them, because your credit is not going to go up overnight. As the end of that article said, it's not a sprint, it's a marathon. So it takes time for you to build, length of history and to build up, the loan weight that your credit needs. So you're not going to do that in 3 to 6 months. It's not going to happen. You want to have the longevity of the credit. And so once you use those credit builder cards to me and you put in all that time into that particular product, then if you do, because you're going to have to use them as a checking account. So that means that you're going to probably have a good bit of your money going into that account in order for you to use that card and be able to, gain that those transactions for you to have a history for them to actually report to the credit bureaus. And so you're going to be losing some of that valuable time to me if you're or at least if you're not doing it simultaneously. If you have this credit builder card and you got yourself a local credit union or local bank that can service all your financial needs that you feel like you may need once you get your credit built, then it'll be fine. But if you're just using that and not trying to build a relationship with an actual financial institution, then that's when I don't like it, because you're going to lose some valuable time that you could be using to build with the actual financial institution, because these credit builder cards will not turn around and give you the money to lend you for a car with a good interest rate. When you're ready to buy a home, it's not going to do that. But a good financial institution that you're already building a relationship with, that offer those services, that can lend to you for those life events, that's where you want to have your money going, and that's where you want to build your relationship with, is with those financial institutions. So number two, my second dislike is that fees for not having direct deposit, or some of them have a spending minimum. So some of them, you have to have direct deposit. You have to have a certain amount of direct deposit going into the account. Or if you don't have direct deposit, you have to spend a certain amount in order for you not to be charged a fee to do the credit building service. So that's another downside too. Number three was you must use the account as a checking account. So that ties into you not being able to build that relationship. So a lot of your money is going to have to go into this credit builder card. And a lot of times, a lot of us don't understand when it says a fintech, it is not a bank. There is a bank that is FDIC insured, but it's not Chime. Chime is not the bank. Sesame is not the bank. Cash App, we just talked about the Cash App breach. Cash App is not a bank. PayPal is not a bank. All these are fintech companies. So they're not actual banks, but there are banks that bank them. Okay. And we're gonna look at that. Just like Experian. Experian is not a bank, but there is a bank that banks them. So let's take a look at that. Let me look into the chat real quick before we look at Experian. All right, I got some purple hearts. Thank you so much, Miss Kathy. Thank you, Nadia. I appreciate you joining me. Thank you. Was that Milk 35? Thank you. I appreciate it. Thank you, Miss Anita, for joining me. Let's see who else I got. I say I have a kickoff account and it did jump my credit and has added to my credit utilization. Well, that's good. That's good. I have looked in the credit. I have looked in the kickoff too. So I'm thinking about doing a separate video on them. All right. So got my cuz up in the house. Thank you so much for joining me, Miss Ann. I do appreciate it. Let's see here. Okay, so hi, I finally caught a live where I'm not driving. Well, cool. I appreciate it. Thank you. Let's see who else. Miss Kathy say the way you explain the pros and the cons is good information. I thank you. I appreciate it. So let's look at Experian. Like I said, I think Experian was the first one that started this alternative way of reporting credit. So they have a digital checking account that helps you build credit, introducing the Experian Smart Money digital checking account and debit card designed by credit experts. Sign up in minutes. The Experian Money debit card is issued by Community Federal Savings Bank. So as I was telling you, these these people that are offering cards, they're not the bank. So the issuing bank right here that we see is issued by Community Federal Savings Bank, CFSB, pursuant to license from the MasterCard International. Banking services provided by CFSB, member FDIC. Experian is a program manager, not a bank. And saying a lot of them are going to have that in your disclosures. Like right here, there's a disclosure, terms and conditions. They're going to let you know that they're not a bank. So when we go to the Chime, I'm gonna show you where Chime has it in the bottom of their and their bottom portion, the little fine print. And I'm gonna show you what Sesame had there. So a lot of times when y'all go on these, fintech apps that are not actual lenders, if you scroll down or it's usually somewhere, it'll tell you who the actual bank is. So that might actually be the name that pop up on your actual credit report. So Experian is saying there are no monthly fees. So enjoy zero monthly fees. Plus, there's no minimum balance required. Secure, FDIC insured, have a peace of mind with coverage of up to 250,000. That's because of this bank up here, the Community Federal Savings Bank we were just talking about, and earn a $50 bonus when you set up direct deposit. So a lot of them want you to have direct deposit because it's guaranteeing that you're going to keep money in these accounts. All right, so it says build credit without debt. So a lot of people are, really, really throwing that out there that you could build credit without debt. And I think that that's a really good thing. I'm not opposed to that at all. Pay bills like your rent, utilities, streaming services with your digital checking account, and we'll find payments that could instantly raise your credit score. So they're going to be monitoring what you do in your checking account. So make sure that you're cool with that because they're going to be looking at your checking account. They're going to be looking at your transactions because it says we'll find payments that could instantly raise your credit score. Now, of course, this is the little caveat. This is your footnote. Results will vary. Not all payments are boost eligible. Some users may not receive an improved score or approval odds. Now, all lenders use Experian credit files. Not all lenders use scores impacted by Experian Boost. So they're just giving you, like I said, what they say, the devil is in the details. So you always got to read that little fine print. A lot of us skip the fine print. So if you have a direct deposit with them, you can earn a $50 bonus when you set that up. Plus, paydays get even better with paychecks hitting your account up to 2 days early. That's one thing that you see now almost across all the boards. Everybody is giving you your money a little earlier. Even credit unions. I know a credit union that I worked at probably, I don't know, maybe 7, 8 years ago. We used to give them early back then. So yeah. All right. So it says no monthly fees and no minimums. Not a fan of fees, neither are we. So you won't pay monthly fees. You're never charged for a zero account balance. So that's good. So that's one great thing of having it bank by a bank that can offer a good checking service where you don't have to pay a monthly fee for the actual service of using the checking account. Now it says that you can get started with your account, sign up now, download the free app. You can scan the QR code, start depositing money, add money by transferring from another bank account or setting up direct deposit. Use your debit card instantly, get your virtual debit card and add it to your digital wallet. Then you're ready to start spending. Sign up in minutes. And then they have a FAQ. And as I was telling you, Experian put it up here at the top, but I always tell you, it'll definitely be at the bottom if they don't have it at the top. They're supposed to put this. It's called Truth in Lending. They're supposed to let you know exactly who is going to be handling your money because these are not banks. Okay. Um, and then you also want to look at any incentive that they're offering too. So right here it says to be eligible for the 50 bonus, your Experian Money Digital checking account must be credited with at least $1,000 in deposits within 45 business days of opening your account. I told you the devil is always in the details, and your account must stay active and in good standing at the time the bonus is paid. The bonus will be deposited into your account within 10 business days once earned. Limit one bonus per card holder. Offer subject to change by Experian at any time, blah, blah, blah. So in order to even get that $50 bonus, uh, your account must be credited with at least $1,000 in direct deposits. Okay. This bank up here, Community Federal Savings Bank, they want you to have at least $1,000 in this account in order to get this bonus. This is what it is. Now you don't have to do it if you don't want to get the bonus. But like I said, a lot of these little fine print details is going to be down here at the bottom. Now I don't see any other fees, which it says it doesn't have any fees, but I still like to check. Now, then they also have this card holder agreement here at the bottom. And so a lot of time, guys, we don't look at um some of these pages to actually know exactly what we're getting into. But I tell anybody, please make sure y'all read these little fine prints, because you don't want to get stuck, as my grandma would say, with your panties down. Because that's when a lot of people be seeing different charges and all this stuff. And you're like, well, I thought this account was free. But then they have these little details and these little bitty little fine print, and you don't see none of this unless you read these actual terms and conditions and disclosures. So please, please, please do yourself a favor and read all that stuff. If you do, even before you even sign up, go down to the bottom of these pages right here and click on the learn more, click on the card holder agreements, and see the card holder agreement. They got it 3 places, 1, 2, 3. So that means you really need to be clicking on it and knowing exactly what you're getting into. And this is the credit bureau. So you can imagine if you're not doing it for the actual credit bureau. All right, so I'm gonna take this one down and then I'm gonna add another one up. So let's look at Chime. Let's look at Chime next. And let's see. Hello, Bionic Woman. I appreciate you joining me. Let's see. Now that's like the Credit Karma card builder. Yep. All right. So let's look at the Credit Karma card builder. We about to look at the Chime. We're gonna look at the Chime one. When I see the green, I think about Credit Karma too. But this is the Chime one. All righty. All right, so how to use the Chime Credit Builder Visa credit card. The secure Chime Credit Builder Visa credit card empowers qualifying Chime members to build credit with no annual fees or interest. Just fund the credit builder secured deposit account with a security deposit. Swipe the credit card on everyday purchases and make on-time payments each month to help build your credit. Plus, with Spot Me, access coverage up to $200 when you use your credit builder card fee free. Now, I'm sorry, guys. I gotta drink some water because I was getting all tongue tied in that one. Now you see, you probably can't see this, but right here it's got a number 5. So that means that's a footnote. It's got a number 1 up here. There's a number 1 right here where it says credit card. It's got a number 2 after interest. It's got a number 3 after security deposit. It's got a number 4 right up in here, a little mini 4, and it's got a number 5. All that means that you need to be looking at with all these numbers, number 1, number 2, number 3, number 4, number 5, and seeing where all those, like I said, the devil is in the details down here about everything that was in that very first paragraph right here. Everything they're talking about with these little numbers, you got to go down here at the very bottom and find out what the actual details about everything that they just said. So Chime Credit Builder, when you receive your Chime Credit Builder card, you'll likely have questions about how to use it. We answer some of the most common questions below. Where can I use the Chime Credit Builder card? You can use your Chime credit builder credit card anywhere Visa cards are accepted. Swipe it for everyday purchases like gas, groceries, streaming services, recurring bills, and entertainment, and pay it off on time by the end of each month. Just make sure you fund your credit builder secured deposit account so you can make purchases without issues. With Spot Me, Chime can spot you up to 200 fee free. And it's got the little five right there, just like it got the little five up here. How much money should you transfer to your credit builder account? This is totally up to you. Just remember that money moved to credit builder will be held in a secure account, and this amount determines how much you can spend with your credit builder card. If you want to spend more with Chime credit card, you will need to add more money to the account. At the end of the month, you can use the money in your secured account to pay your balance automatically with the safer credit building feature. You can also manually pay off your balance with funds from your Chime checking account or secured account. The easiest way to move into Credit Builder is by using Move My Pay. This optional feature will move the amount of your choice into Credit Builder on every payday. You can also manually move money from your checking account at any time. Just tap Move Money in the app to get started. See, now that I'm sorry, that's just too much. Can you make can you make free ATM withdrawals with Chime Credit Builder? You can use your credit builder card to get cash at ATM. I'm not really concerned about that. Can I get fee-free coverage on my Chime Credit Builder card? Yes, Spot Me is available when you use Credit Builder. Now you can get covered up to 200 when you need it fee-free. Now, just because this keep popping up, I got to go down here and read the details about this Spot Me thing. Is really got me intrigued. So right here, Spot Me for Credit Builder is an optional, no interest, no fee overdraft line of credit tied to the secured deposit account. Spot Me on debit is an optional, no fee service attached to your Chime checking account individually or collectively. Eligibility for Spot Me requires 200 or more qualifying direct deposits to your Chime checking account each month. So you got to at least be putting $200 in there. Now, where else I saw something else? Okay, where it Spot Me. This is the number 5 that they kept referencing to. Spot Me on Credit Builder is an option, no interest, no fee overdraft line of credit tied to the security deposit available to qualifying members with the active Chime Credit Builder account. To qualify for the Spot Me on Credit Builder service, you must receive 200 or more in qualifying direct deposits to your Chime checking account each month. Qualifying members will be allowed to overdraw their security, they're allowed to overdraw their secured deposit account up to $20, but may later be eligible for a limit of up to $200 or more based on Chime account history, direct deposit, frequency, and amount spending activity in other risk-based factors. So everybody, you don't automatically get the $200. At first, if you want to put your account in the negative, to kick in this Spot Me, it's gonna go up to $20 at first. But later you may be eligible up to $200. This depends on how much money you got in and how you take care of your account. The Spot Me on the credit limit will be displayed within the Chime mobile app and is subject to change at any time at Chime's sole discretion. Although Chime does not charge any overdraft fees for Spot Me on credit, so if you go into the negative, it doesn't charge you. There may be out of network or third party fees with ATM transactions. Spot Me, and then it's got a link right here to the Spot Me on credit terms and conditions. Woo, I bet that's interesting to read. All right. So now up here it says to be eligible to apply for the credit builder, you need to have received a single qualifying direct deposit of $200 or more to your checking account. The qualifying direct deposit must be from your employer, payroll provider, gig economy payer, or benefits payer by automatic clearinghouse ACH deposit, bank ACH transfer, pay anyone transfers, verification or trial deposits from financial institutions, peer to peer transactions from services such as PayPal, Cash App, or Venmo, mobile check deposits, cash loads or deposits, one time deposits such as tax refunds, and other similar transactions, and any deposit to which Chime deems to not be a qualifying direct deposit or not qualifying direct deposits. So they have their qualifying is $200. So in order for you to even do this credit builder, you got to at least have $200 going into this checking account. Experian said it well, to get the bonus, it was 1,000, but other than that, it wasn't any minimum. All right, so Chime Credit Builder and your credit score. Consistent use of the credit builder can build your payment history, increase the length of your credit history over time, and can balance out your credit mix. Learn more about how this works below. How does the Chime Credit Builder card help you build credit? The Chime Credit Builder card offers features that empower you to improve your credit score, and here's how. One-time payment made easy. On-time payment made easy. On-time payment is a crucial aspect of credit building. With our safe credit building feature, we'll use your money in a secured account to automatically pay your monthly charges. We report these payments to three major credit bureaus to help you build credit. Build credit with your own money. After you make a purchase with Credit Builder, you can use the money that is in your secured account to pay off your balance automatically. By limiting spending to what you have in the account each month, you can more easily stay within your budget and avoid outstanding balances. So, no more credit utilization. With many credit cards, high credit utilization can negatively impact your credit score. However, Chime doesn't report utilization because Credit Builder doesn't have a present limit. You set your limit with your own money. This means you don't have to worry about a bad mark on your credit report because of high utilization rate on your Credit Builder card. Because in essence, what's going to happen is it's going to look like a charge card. If you got American Express charge card, like the gold card or the platinum or the green, it doesn't have a preset spending limit. So when it'll show up as a revolving line of credit, but there's no limit on it. So whatever you use, it's just going to report that amount. So whatever is reported on the statement, that's what's going to be reported, but it's no way to calculate utilization. So really, in essence, that can work against you because the way the credit score work, and if you are not new to my channel, y'all know I have broke this down all the way down to the points, because credit utilization counts for 165 points of your score. All right. And so when you break down the credit utilization, it counts for 30% of your score. And if nothing is calculating in the credit utilization part of your score, then you're going to be missing out on that particular part that gives you the points for that part. So that's just like if you have a credit card that's always reporting a zero balance, that's not helping your score either. You need to have something reporting. It doesn't have to be a lot of something. It could be between 2 and 4% or whatever your credit limit is, but you want that to report. That way, that part of your credit score has something to calculate. So I understand what it's saying about no more credit utilization, because a lot of people have high credit utilization when they max out their credit cards or when they have their credit cards over 50% of utilization. That's when it really starts to get hairy. Once you really get up to 31%, then that's when it starts to negatively affect your credit score. But if you keep it lower and under 10%, but like I said, around 2 to 4% of the card limit, you want that to report, because that's going to show them that you have the responsibility to be able to handle your credit limit. So it also weighs into that credit score to help boost your credit score. So That's why I say I think a lot of times with credit cards, we just have to educate ourselves on how the credit cards work before we even get one. High credit utilization isn't a thing if you're using your card responsibly and paying your cards off every month to not have interest. And you can have something reporting on your statement without carrying a balance and without paying interest to the bank. You do not have to carry a balance and pay interest to the bank in order for you to have some money reporting on the statement. And I did a video about that. And after this live, well, after it uploads, I will link it to this if you want to go back and look at how I break that all down for what how the lenders look at that kind of stuff. So that part right there can hurt you, but I understand why they are saying high credit utilization can negatively impact your credit score, but no utilization can also hurt your credit score as well. All right. So increase credit score over time. The longer you maintain a healthy credit record, the more lenders view you as credit worthy. By maintaining a healthy credit builder account over time, as I was telling you guys before, credit building is a marathon and not a sprint. The more you have in time, the more you're going to increase, as it says, your average credit age. How long have you had credit? That goes into your credit worthiness. How long have you been able to manage good credit? Um, it shows how responsible you are, because at the end of the day, your credit score is just showing lenders how risky you are. And in order to look risky, your finances have to not be on point, because if you have the money to pay your bills, if you have the money to pay your card, if you match the card out, you have the money to pay the card back down or pay it off, why wouldn't you? So it's just one of those ways, kind of like those tricky ways that they're seeing how you are with your actual finances, right? So, and show lenders that you can be responsible with credit products like loans. So you want to always um have a very good length of history. And I know some things happen that can cause our credit to take a hit, but I talk about some of those things in some of my other videos, so I don't want this live to go too long, but I will link those for you guys if you want to check them out. How fast does Chime Credit Builder improve your credit score? So that's the $1 million question. Each Chime member will have their own credit journey with Credit Builder. The impact on their credit will depend on their score before opening the Chime Credit Builder card. How often they use the card, their ability to make on time payments, and additional credit factors outside of the Credit Builder account. That said, the average Chime member sees a 30-point increase in their credit score after approximately 8 months of using the Credit Builder card. And they got a number 6 right here, the little 6. So we know that they got some extra caveat down there in the bottom of the page. You may experience a temporary credit score decrease when you first open a credit builder account. Applying for a credit card results in a hard inquiry on your credit report. This can temporarily lower your credit score. Opening a new credit card also lowers your average credit history length. So that's your length of history. The average length of your credit history is one factor that impacts your credit score. In general, the longer an account has been open and in good standing, the better it is for your credit score. And they got a little number 7 right there. Don't stress too much about these early impacts on your credit score. As you make on time payments with the help of Chime Credit Builder's safer credit building feature, your credit score could improve beyond where it started in several months' time. So let's see what the number 6 down here is for. It says, based on a representative study concluded by Experian, members who made their first purchase with Credit Builder between June of 2022 and October of 2022 observed an average FICO score increase of 30 points after approximately 8 months. On time payment history can have a positive impact on your credit score. Late payments may negatively impact your credit score. So we know that. But it's good to know that it says that that is that you're seeing this 30-point increase with the FICO score, because that's the score that most lenders are using. Now they say you see a increase with Vantage, then that's not going to help you because most lenders not using Vantage. All right. So that's the Chime one. Let me see what else we got. Let me remove this one. Let's see who in the chat. Builders and I said, I made it today. So hey, thank you for tuning in. Is that I have the same thing. I do have Chime. Okay. Do you like Chime Milk 34? Do you like it? Has it helped your credit? If you're still on the live, has it helped your credit? All right, let's look at Sesame. Let's look at credit Sesame. All right, so credit Sesame, same kind of deal as the ones that we have already looked at. Build credit with your everyday debit purchases with our patented Sesame Credit Builder. Paying for things like gas, groceries, or monthly bills can automatically grow your score. And there's our little number one down there at the bottom that we know we got some more reading we got to do. So how credit builders work. You sign up, no credit check, no security deposit, no debt or interest, instant approvals, fees may apply. They got the little number one and the little number two. All right. Add money. This is your account balance used for debit purchases and monthly spending. All right. Spend. Use your card for debit purchases like groceries, subscriptions, utilities, and everything in between. Credit and bill credit. We report your spending as a on-time payment to build your credit history. And so they're saying that the on-time payments will be reported to all three major credit bureaus, and Chime does the same thing. Now I think Experian said they only do it to Experian. So theirs wouldn't be a good option because I mean, if you're gonna do this, you do exactly, want it to report to all three. It's not, it's a waste of time just to have it reporting to just one. I would want something that's going to report to all three. So it says, so they got like a credit Sesame versus the others. So they got a traditional secured card and their credit builder card. So use as a debit card, instant approval, no upfront security deposit, no interest charges. The traditional secured card, separate credit card, approval needed, security deposit required, interest charges may apply. Credit builder works with your Sesame Cash debit card. So they got a Sesame Cash debit card, but now they have the Sesame Cash with Credit Builder. So you can, I guess, graduate this one over to this one in order to have the bill credit with everyday purchase feature, because all the other boxes check, and then they got this last one over here. So this one is the new thing they got going on. So let's look at some fees. So it says monthly fee $9.99 waived with qualifying account activity. And then they got the number little two. So you got to read what the number two is. And activity fee $3 waived for active users. No minimum account balance required. Free withdrawals at 55,000 ATMs worldwide. And then they got some testimonials, and you can download the app and who they've been featured on. Security you can trust. Tips to building your credit. We can get past that. Start building credit history with debit purchases. So they got to sign up, got the FAQ right in here. And then let's get down here. I like this part. This is my favorite part of it. I want to get down to the nitty gritty. So Sesame Cash is a prepaid debit card issued by Community Federal Savings Bank. So this is the same bank that issued a card for Experian. The CFSB, that's the same bank that's issuing the card for Experian. And you know what? I didn't even say who is the bank for the Chime card. My bad. My bad. I didn't even say who was the bank for that one. Let's go back to that one. Let me show y'all who the bank is for that one. Because I'm telling you, these are fintech apps. They're not banks. Okay, so Chime is a financial technology company, fintech, not a bank. Banking services are provided by Bancorp Bank NA or Stride Bank NA members FDIC. The Chime Visa debit card and the Chime Credit Builder Visa credit card are issued by Bank Corp, Bank NA, or Stride Bank NA, pursuant to license from Visa USA Inc. and may be used everywhere Visa debit and credit cards are accepted. So I was telling you guys when we first was talking about it that these fintech companies are not bank. So they have to have a bank in order to, issue these cards and to insure your money because they want you to set up direct deposit. They want you to keep certain amount in some of these accounts and all this kind of stuff. So they have to make sure that your money is protected. But they're not a bank. All right. So these right here said that theirs is, let me go back. Where am I at? So theirs is the same as Experian, the Community Federal Savings Bank. And I'm gonna go ahead and do a copy and I'm gonna find out who this bank is. I'm nosy like that. I'm a whole financial detective. I'm a whole financial detective. I be wanting to know who, what, doing what. Okay. Building credit with Sesame Cash requires you to open a secured line of credit with CFSB, that is the bank, that is reported to the credit bureau. So on your credit profile, that's probably what's going to show up as I was telling you before. Use money from your Sesame Cash account to create a secured line of credit, secured account. Your debit credit card purchases are then added up to create a balance on your secured account. As you make these purchases, an amount equal to the balance on your secured account is also set aside in your Sesame Cash account to ensure you can make timely payments to pay off the balance on your secured line of credit at the end of each month, allowing you to build a positive payment history. Credit Sesame does not guarantee credit score improvement. Now that's interesting. Any predicted credit improvement from the use of your secured account assumes that you will maintain healthy credit habits, including paying your bills on time, keeping credit balances low, avoiding unnecessary inquiries, appropriate financial planning, and more. So it's assuming that if you do all the stuff that you're supposed to do anyway with your credit, and you can do that with your bank or credit union, then you're going to improve your score and not with these so-called credit builder cards. So they not guaranteeing you because they can't guarantee what your behavior is going to be. Okay. At the end of the day. All right. So this is the little number 2 that we were saying up there at the top. So Sesame Cash fees include a $9.99 monthly fee and a $3 monthly inactivity fee. So they got a monthly fee for this account. And they also have a $3 inactivity account. So that means that you got to always be using this card as long as you got this account open. You can't let this card go what they call dormant or inactive. All right. And that you could assess a $3 inactive card fee. So right now you're already finna rack up some fees with this card. However, you may waive these fees as follow. To qualify for the waiver of the monthly fee, the $9.99, you must either deposit $500 into your Sesame Cash account through direct deposit or spend $1,000 each month with your Sesame Cash account. Now that $1,000 then came up again because this is the same bank that Experian is using to do their credit builder card. And this thousand, now over there, they said that you could do it with just $50 to get the $50 bonus. It wasn't a requirement over there. It was to get the $50 bonus with no monthly fee, no minimum. Over here, you're going to get charged a $9.99 monthly fee if you do not have a direct deposit into your Sesame account of at least $500 through direct deposit or spend $1,000 each month with your Sesame Cash account. Because when you're using these cards, they get a kickback for every tap, every insert, every swipe, everything you do. It's an interchange fee. So they don't want to just issue you a card that you just carrying around in your wallet. Well, even your banks don't want you to do that, or your credit unions, because that's how they make money. But these right here that's trying to give you a boost to your credit, um they definitely not don't want you to just be chilling with the card. They want you to use the card. So if you got $1,000 that you're putting in this account to avoid, or $500 to avoid paying this $10 a month uh maintenance fee for this account, then you are tied to a lot of your money going into this company. And that's why I was saying about why I dislike it, because that's, unless you make really good money where you can just let 500 go over there and then you can still have your direct deposit going into another bank or a credit union, then that's cool. But if you don't, then, and then you really want to use this as an option to build your credit, I feel like you'll be wasting a lot of time that you could be using with an actual bank that, or credit union that can actually help you when you really do want to get the bit like purchases, the good car interest rates, the home rates, all those things that are real major ticket purchases. All right, so spending can be satisfied either through point of sale transactions or by using your Sesame Cash card to pay your bills. To qualify for the waiver or the inactivity fee, there must be money moved or a purchase made with your Sesame Cash account at least once within a 30-day rolling period. As a courtesy, we will not charge you the monthly fee or the inactivity fee within the first 30 days of your account opening. Review the Sesame Cash or cardholder agreement for the full fee schedule and additional details. International and out of network cash withdrawal fees apply. Third party cash deposit fees may also apply. So they telling you right there to make sure you read the cardholder agreement for the full fee schedule, because they only disclose what the monthly fee and the inactivity fee is, but there may be some other fees that might can creep up, as I told you before. But if you don't read the details, because I told you the devil is in the details. So if you don't read the details and then these little fees pop up and you're like, now what is this about? It's always inside of all that 1,500 pages that we don't normally read. All right. So those are two right there. Like I told you guys, I'm not completely opposed to them. As far as people using those to build their credit with, because it's an alternative to not getting in debt, as I said, because you're using your own money. So I'm not, and then it's no annual fee now with that Sesame. you know that $10 can rack up. That can be equivalent to $120 a year if you're not doing the $500 direct deposit, or spending $1,000 a month. And so that's $120 that you'll just be giving them. So that's something to think about. Um, Now, like I said, I'm not opposed to it. Let me see who's in the chat real quick. Somebody said, "What about the Milestone Mastercard Star?" That might be one that's on my list. I think that Milestone Card and Destiny, I think that's on my list of the worst credit cards to get. Don't Ain't that the one that got that terrible interest rate and annual fee and all those different fees? I'm not a fan of none of those cards. I'm pretty sure I did a card. Yeah. No, Milestone is terrible. Run, baby, run. Yeah. Yeah. I definitely did a video on that one. Destiny, um, Premier Bank. Some of the worst cards, run, don't walk, run. When I first reviewed all these, I don't like when I have to hunt for information. When I need to know what your interest rate is, I don't want to hunt for all that information. It need to be a FAQ going on somewhere down here, terms of use and stuff. See, the Milestone card is issued by the Bank of Missouri and serviced by Concora Credit Inc., whoever that is. So that's why I say we always got to be looking at who is the bank of these cards, because a lot of these cards are fintech companies. They're not an actual bank. Who's the bank? That's what I want to know. Who's the bank? And I don't know what's going on with my internet. agreement for the use of our website. So this is for the use of the website. I want to know, um, I be wanting to know what the card holder agreement is. That's what I be wanting to know. And if I have when I go on a website to companies like this and they don't have stuff easy for me to find, that means I need to run, and don't look back. That's what that means to me. That means I need to run, because there's things like I told you before. It's called truth in lending, and nothing should pop up as a surprise for you. You should be able to read everything that they have going on about a credit card before you ever sign up for it. You should be able to read all their terms and conditions and all those different things before you ever even fill out an application. And if you can't, they're hiding something. And that means run and don't deal with those people. Do not. Do not. So no, I'm not a fan of them. I did a video on my channel called and I'm gonna pull up my channel real quick to show you guys what video I'm referencing to. Because I know it was last year. I know it was last year when I did it. I know it was last year. So it's this video right here. Worst credit cards. Beware of the credit card building credit cards. Beware of those. So I'm going to definitely link that one. You guys make sure you check that video out. I did that video, it's 11 months ago. So this I know it was last year. So it's going on a year old. But those are the worst ones that I found, that when you see them, you want to run. Not walk, run. Well, I'm going to go ahead and get off of this live now. I really do appreciate everybody that did join. If you have any questions, just leave them down in the comments and I'll continue to answer your questions even after the live is over. I do appreciate you guys for tuning in to the live this afternoon. Please like, share the video, subscribe to the channel, share it with other people that might want to learn more about the credit builder cards and some of the things that you may want to consider when joining these and or signing up for these cards. And I really do appreciate it.